Good afternoon, everyone, and welcome to the latest in the series from Stowe and Degon webinar series. I'm Marty Coyle, partner here at Stowe and Degon. And I'll be the host, and we're going to wait about 1 minute before we get started. So if everybody just sit tight for 60 seconds, we'd appreciate it. Okay, hopefully everybody's in. So today we're going to talk about South Dakota versus Wayfair, 5 years later. Back in 2018, the Supreme Court adjudicated this matter, and it greatly changed the way states can tax companies. And today, next slide, please. We have a guest speaker who was a colleague and an old friend of mine, Inez Mello, who is the director of state and local taxes here at Stowe and Degon. And I think she's widely regarded as one of the top SALT or state and local tax people professionals in New England. She's a frequent speaker at CPA events, at legal events, and she's a professor and teaches students this stuff. She knows this information cold, and she knows that 2018 was a watershed time for the way states can tax companies. Next, please. Before I introduce Inez, we want to go through a few housekeeping things. First, as always, we encourage any and all questions. There's a Q&A box. You can type in your questions, and we will address them at the end. If we don't get to your question, if you let us know how to reach you and who you are, we will contact you by email or phone. Secondly, the program is being recorded, so you don't need to write down every little thing. It should be available on the Stowe and Degon YouTube channel in another day or two. And we would be happy to also send you a copy of the slides if you want them. Just email anybody at Stowe and Degon that you talk to on a regular basis. And finally, after the webinar, we have a short survey. We ask you to give us your short and honest answers. We want to make sure that all of our webinars are top quality, and the future ones will be too. So thank you for that. Next slide, please. Last slide for me, and then I'll turn it over to Inez. This is our normal disclaimer. This is the information that we know as best about state and local taxes and Nexus as of today, December 12th, 2023. So if you're watching this video replay in March or April or May next year, things may have changed. And also, please contact Inez Mello at Stowe and Degon if you have any questions, or your contact person at Stowe and Degon. This is a complicated area, and you're going to learn a lot. I promise you, you're going to come out of here with some questions and some concerns about your company. So without further ado, I want to introduce Inez. She's going to speak for 35 or 40 minutes about this topic. And then at the end, she'll kick it back to me, and we'll handle any Q&A that you have. So Inez, welcome.
Thank you. Thank you, Monty. And thank you for joining us today. I truly appreciate it. And I know what you're thinking, because most of you guys have known me for quite a while, and you're saying there's no way she's going to be able to tell us everything in 1 hour, quite honestly. And so, like Marty said, please feel free to call me, and I'll be happy to discuss any of the situations that you have. I want to start out. This is such a complicated situation, Wayfair, and it took so long to come into its full being that I want to spend a few minutes on how did that exactly happen, so that you understand some of the concepts behind the theory for Wayfair. And I actually wrote this in 2006, and it says the sales tax man or woman cometh. And it says sales and use tax applies to every taxpayer in every industry, in virtually in every state, and has no regard for the fact the taxpayer may incur a net operating loss each year. The odds that your business will be targeted for a sales tax audit is probably greater than you realize. To make up for that budget shortfall, states are increasing the number of auditors on their payrolls and the frequency and volume of audits. Now, I wrote that in 2006. It's 2023, and it's got to be 10 times worse for the aggressiveness of the states. And like Marty said, on June 21st, 2018, the United States Supreme Court decided South Dakota versus Wayfair in favor of South Dakota's imposition of sales tax collection obligations on remote sellers meeting economic thresholds based on in-state receipts or transactions. Now, how did this ever pass? Because in essence, Quill, the court case that we always utilize to defend the taxpayer from having a sales tax registration obligation, in essence, Quill was killed. And how did this come to be? And so I just briefly want to talk to you about that for a minute. It was Supreme Court Justice Kennedy. He looked at the following aspects of that South Dakota law. And what he honestly liked was the threshold size, because it does say if you have, and we're going to go through this very carefully over the next hour, if you have $100,000 worth of sales or 200 transactions or some variation of that combination. And he liked that idea because he thought it would provide small businesses with some protection from having a sales tax filing obligation unless they had met that threshold. So Justice Kennedy liked it. The second thing that he liked the most, and you guys are going to think he's making this story up, I am not. It is not retroactive. Quill came out, the Quill Corp case came out in 1992. And when we first got word that this was going to happen, some of the states absolutely were thrilled and they came forward because you guys know I still serve on the governing board of the Streamlined Sales Tax Project. And the states came forward and they said, oh, good, you're going to quit. You're going to kill the physical presence requirement in Quill. And Quill was in 1992. We're going to go all the way back in audit and pull audits going all the way back to 1992 and saying, guess what? Quill doesn't exist anymore, that physical presence of Quill. So now we can come after you. You should have been registered and filing all these years. And there was, I'm telling you, at least 2 or 3 months argument on that. And finally, everyone decided that that was ridiculous. And so that's what Justice Kennedy liked the most, that it was not retroactive. It was not going to allow the states to go back to 1992. And then, of course, we don't talk too much about the Streamlined Sales Tax Project, but the technology from that project that's in place, it's going to simplify the collection process. And he recognized that collection simplification measures were in place. And South Dakota was honestly one of the first states that became full member states of the Streamlined Sales Tax Project. So when he looked at those 3 aspects, he absolutely said, okay, we're going to make this happen. We will kill Quill and we will allow the physical presence test to come into play. A little bit of background on that, okay? In 2010, and I'm going to talk about corporate taxes for 2 minutes. In 2010, Connecticut was the first state to change to an economic-based nexus standard, okay, from a corporate perspective. And the multi-state tax theory behind this is this. You are purposefully directing business towards my state. And if you guys can picture me teaching this course at Bryant and up at the blackboard, putting a big red chalk comma, you are purposefully directing business towards my state, comma, regardless of whether you have a physical presence or not. Wayfair kills that physical presence requirement. And this happened in 2010 from a corporate perspective in Connecticut. Well, the states witnessed the exception of economic-based nexus, and there was absolutely no successful legal challenges. It was not challenged from a corporate perspective in any way, shape, or form. So now you've got these states looking at this and they're saying, hey, wait a minute, they're getting away with killing that physical presence. So the states at that point absolutely adopted that to sales tax. That's how Wayfair became based on economic-based nexus. And I'm going to say it again. You are purposefully directing business towards my state, comma, regardless of whether you have a physical presence or not. And that's what kind of brings us to today's scenario. Now, what I thought would be easier to do, teaching this is kind of difficult with all these states. And I thought I would this is my, seriously, this is my design. I've used this for a few years to kind of explain Wayfair a little bit better. So please feel free to use this in any way, shape, or form. And again, like Marty said, after the presentation, if you email me, I'll make sure that you get handouts from today. And I hope you guys can see the states, because I'm going to go line item by line item, because the way this has been designed, it's a teaching tool. So bear with me, please. The first state we're looking at is Alaska. And I'm going to bring what I think is important. Alaska, okay? Alaska, Delaware, Montana, New Hampshire, and Oregon have no sales taxing system. Again, Alaska, Delaware, Montana, New Hampshire, and Oregon. So you have every right to say to me, but Inez, they participate in Wayfair. How is that possible? Well, if you look at this, you'll see that Alaska has a $100,000 threshold or 200 transactions. But look what I put under the effective date, the municipalities. There's only not, it is not, and again, I reiterate this, Alaska does not have a sales taxing system, so it is not the state of Alaska. A few of its municipalities decided to follow Wayfair. So if you happen to have clients in Alaska, you got to be very careful about that and look at that. What I've also added to this chart, you can see the columns across the top, is what does the threshold? Let's talk about that now. Alaska has $100,000. Alabama has $250,000. Arkansas has 100,000 or 200 transactions. Look at that third column. I mean, look at that last column that's highlighted in yellow. Does the threshold include exempt or resale sales? And this is important because when I do a multi-state tax analysis and I bring this to the attention of the client that I'm doing the analysis for, at first, I have to tell you where legally, I have to tell you in that report where you've created a filing requirement for sales tax or for income franchise tax. But look at that column again. Focus, be laser focused on that column. And I set this up because I honestly use this chart when I perform state and local tax analysis, specifically looking at Wayfair, because you need to be able to see it. Look at now. That chart says the threshold includes exempt resales or sales. In Alaska, it happens to include exempt sales. In Alabama, it happens to include exempt sales. Before you jump off the ledge, literally, and you think you have all this additional sales tax registration filing obligation, please be aware of what makes up the threshold. Your sales may not be included in the threshold. Again, Alaska exempt resale sales. What if you have, the threshold includes exempt resale sales for Alaska, for Alabama? Well, what if you have a lot of exempt resale sales? Then that's not going to be subject to sales tax. You're going to back that out. Like say you had $300,000 worth of sales, okay? And 200 were exempt. You're going to back that out of the 300, and you're only going to be subject or responsible for the sales tax on your taxable sales. That's the value of that column. And I update this chart at least every other month because that's how quickly sometimes it changes. So, and I gladly would send you that if you want. Give me, your email address and I'll send you any updates. But you got to keep your eye on that. And again, don't panic and say, oh my God, I have 10,000, I have $100,000 worth of sales. Yeah, you have $100,000 worth of sales, but you've got to make sure you know the makeup of that sale. And are all your sales subject to sales tax? Maybe not. So that's when I say it may not be as bad as you think it is when you first look at something like that. Well, let's get back to Alaska. $100,000 worth of sales or 200 transactions. And you got to be careful. You got to look at the transactions. You could have had you could have had $50,000 worth of sales and, and you didn't meet that. And you had the 200,000. I mean, I apologize. You had the 200 transactions. So you've got to look at that carefully. Going across, you have nothing else going on in Alaska. You don't have any Nexus creating, we're going to go through that, any sales tax Nexus creating activities. So you would not have to register. You have no sales tax obligation in Alaska right now. Look at Alabama. Alabama, $250,000, okay? Included, exempt sales are included. Resale and exempt sales are included. So it shakes out that you have $200,000 worth of sales, okay? I said you had $200,000 worth of sales. So you have not met the Wayfair threshold. But look across, because this is what I'm seeing. See, when I go to help clients, they're showing me notices, obviously. They get what Wayfair is. They get that they need to look at the threshold. And they're saying, okay, I haven't tripped the threshold for sales tax. I'm good to go. And they're forgetting to ask the question, yeah, but wait a minute. Do you have any other Nexus activity going on in the state? Have you triggered a traditional sales tax Nexus filing requirement? And I want to clarify this right now because I'm amazed at how many taxpayers think this. When they think of Wayfair, they think of, okay, did I trip threshold for Wayfair registration? And do I still have traditional Nexus for sales tax? That's not two separate sales tax registration obligations. You only register once for sales tax. You wouldn't register for sales tax thinking, okay, I'm going to report my Wayfair sales through that and then register again because I've tripped traditional. So when I say you have both, you've tripped it for both, I certainly don't mean that you need to register twice for sales tax. So going back to Alabama, you have $250,000, that's the threshold. You have $200,000 worth of sales. You have 400 transactions. Alabama doesn't care about your transactions. Now go down the rest of the sheet. The rest of the sheet shows you Nexus generating activities. You have solicitation of sales. For sales tax Nexus purposes, if you have solicitation of sales in the state, you have a sales rep going into the state, doesn't need to be a resident sales rep. That's enough of a filing requirement. That's enough of Nexus to trigger what we call a traditional sales tax filing requirement. So again, when you look at that, you haven't tripped it for threshold for Wayfair. You can't just say, okay, I'm good. You've absolutely tripped it for a traditional sales tax filing requirement because of the solicitation of sales. I can't tell you how many errors, or I see that in notices where the taxpayers get it about Wayfair, but they forget that they still have traditional Nexus sometimes. Arkansas, nothing. I didn't give Arkansas any sales. Arizona, I didn't, or California. If we come back down to Colorado now, Colorado, you have $323,000 worth of sales. You have 646 transactions. Colorado doesn't care about your transactions. You absolutely have tripped it for a what? A Wayfair sales tax filing requirement. Why are the transactions important? Like I'm surprised, to be honest with you, I'm so surprised how many states now are eliminating the transaction test for Wayfair. I always ask a client, even before Wayfair, to look at their transactions by state, because sometimes the state looks not only to the business generating activity, but the continuity of that activity. There's a big difference in saying, well, my truck delivers in your state every quarter, or I have deliveries going into your state every week. So I've always wanted to know what is the what? The activity and the continuity of the activity. So please keep that in mind, the purpose of that. Connecticut, look at how, and you got to read how the transactions go. Connecticut says you have to have $100,000 worth of sales in my state and 200 transactions. See the and? That's a big difference than or. Okay, so you got to pay attention to that. Now, I made it that you had $100,000 worth of sales into my state and you had the 200 transactions. And so obviously you've tripped it for Wayfair in Connecticut. Coming down to Delaware, we really don't care. Delaware could have had $4 million worth of sales in the state because Delaware doesn't have a sales taxing system. Florida, the threshold's 100,000. The threshold for exempt resale sales is not included. I told you in Florida, you had $278,000 worth of sales and you had 100 transactions. So you obviously tripped a Wayfair sales tax filing requirement. And look further down, and I have you having payroll in Florida for a reason. So we're looking at Florida. Florida doesn't include exempt or resale sales, okay? And I told you you had $278,000 worth of sales. Now, what if all of your sales were exempt? You have every right to say to me, well, Inez, that's crazy. If I go under audit and the state's going to get nothing, do I really care? Quite honestly, that's what that's saying. And I would agree with you, and we're going to discuss this if we have time at the end of the presentation. I initially would agree with you, but look what I've done. I've stuck payroll in your state. So you have a sales tax filing obligation because of the payroll under traditional Nexus. And you could still say to me, well, why do I care? My sales are all exempt. I'm still good. If I went into audit, I still would get what? 0. And that's the truth. And this is why if I have a client in this situation where all the sales are exempt, and of course they have all their exemption sales certificates to show me so that I know they're telling me the truth and they're not going to get whacked. If you look, again, I put payroll there for a purpose. I always tell a client, when you have 100% exempt sales and you're comfortable with that, like you can prove it to the state, and you think, well, why would I register? That's crazy. If I went in an audit, I wouldn't get charged anything. Because of the payroll, that doesn't negate the fact that your sales are exempt. But because the state knows who you are with payroll, I've seen an increase in audit since the inception of Wayfair because the state knows who you are with payroll. So the state can come after you legally for a sales tax registration obligation. And again, if you can prove it, they would get 0. But until you file that first return, the statute of limitations is open. And so say you had to file quarterly returns. I mean, no state wants a 0 sales tax return every month. Eventually, they would come back and say to you, we've noticed that you've been filing 0, sales tax returns for the past 6 months. We're going to put you on a quarterly basis. I would rather see a client protect themselves and file a 0 quarterly return, knowing that they stopped the statute of limitations, but knowing that they won't go under audit, or they're less likely I shouldn't say that. If they go under an audit, the audit will have a limited look back period because they have been filing a 0 state tax return. So as much as filing a 0 quarterly state tax return may not seem something that you want to do, it will help you in any potential audit. And so I've now, because of Wayfair, I've been recommending that you still consider filing. Okay. Let's drop down to Illinois. Okay, Illinois says 100,000 or 200 transactions. I gave you 84,000 in sales, and I gave you 20 transactions, and I have absolutely no no other activity. So you would not have, based on this information, a sales tax registration obligation. Now in Indiana, okay, I gave you $520,000 sales per state. I gave you 234 transactions. So clearly you've tripped what? A sales tax registration because of Wayfair. And you've got other activity. You own a lease, maybe you have an office there, you have inventory in the state, you're registered to do business, you have payroll in the state, you're performing or doing installation in the state. You clearly have tripped a sales tax registration obligation. Now let's go back over some of those business activities. What if you hadn't tripped Wayfair? Okay, you're saying, I haven't tripped Wayfair. What if you didn't have that office? You didn't have inventory. You weren't registered for business. You only had, I'm going to tell you, it's not listed here. It's called, let me get the verbiage correct. They connect companies and skilled technicians. It's a labor marketplace company. The one that I'm going to discuss with you, I have 3 clients recently in the past year come to me because of it. And they're associated with Field Nations. And Field Nations is it's a company of skilled technicians in the labor marketplace. You have installation going on in several states, and you just don't have the skilled employees, or you don't have a number of employees to go out and do these installations. Installation alone would trigger a sales tax registration obligation because it's a sales tax business activity. But you could come back and say to me, but Inez, it's not me. My company's not doing the installation. I don't have the means to do the installation. I hired Field Nations. Field Nations engineers are going out and doing all this work for me in these various states. Be careful. And I say this to you because I can't believe I've had 3 companies come to me recently that utilize Field Nations. Field Nations, you will have to issue Field Nations a 1099. And that's called, well, a 1099. Will create that sales tax registration obligation for you. So if you hadn't met your Wayfair sales tax here, you had no other business activity here, but you had a column and you called it Field Nations, and they did the work for you, you would have traditional sales tax registration obligation. It's called agency relationship and sales tax. And please don't forget that, okay? You would have a sales tax registration obligation. All right, so, and I only bring that to your attention because, like I said, I've seen it 3 times during this past summer. That's highly unusual. So I want to make sure that you're aware of that. Let's talk about business activities, okay? Forget about Wayfair for a minute. If you have inventory in a state, you have a sales tax registration obligation, okay? Even if it's in an Amazon warehouse, you still have title to that inventory, and that's creating a sales tax filing obligation for you. And if Amazon is filing sales tax on your behalf, see this column here, threshold include marketplace sales? That's a marketplace sale. But you got to be careful because it says Amazon will collect sales tax on your behalf. But what if you have other sales? What if you participate and you have a Shopify type situation? So you've got Amazon sales, you've got Shopify sales, and you've got a store in a state. You've got to make sure what is creating the sales tax filing obligation, what is being remitted to the state, and do I owe the state additional sales tax, certainly on Shopify and anything that I have in a store here. But that's what that 3rd column, I apologize. Yeah, the 4th column, the threshold includes marketplace sales. A lot of taxpayers don't think about that. Please consider that. Please consider how am I selling? Where am I selling to? And how am I getting that inventory? How am I selling? Because that very well may trigger that column there that's called threshold included in marketplace sales. So please be careful of these things. But installation in a state, having a sales rep go into the state doesn't even need to be a resident sales rep. Training in the state, you can do training to what? Your sales force, but you can't train your customers. These things are creating what's called traditional Nexus activities. Kansas, nothing. Kentucky, nothing. Louisiana, 100,000. I gave you $75,000. And I said, you only have 75 transactions, okay? And I told you that you had inventory in a state. You have traditional filing requirements. You have not tripped Wayfair. You have traditional filing requirements, okay, with that inventory in the state. Massachusetts, you're registered in Massachusetts. You're located in Massachusetts. So obviously, you're correctly filing everything there. Maine, look at Maine, 100,000. As of 1/1/2022, Maine changed. See, that's what I have to check. I have to check on this like every month, the changes, to be honest with you, when I update this every month. So you have $80,000 worth of sales in Maine. You have 80 transactions in Maine, which in 1/1/2022, they eliminated the transactions. Okay. Let's see what else. I know I gave you something else. Solicitation of sales. I wanted you to see how something is I don't want to say small, but what a lot of clients think about, because they think it's like almost insignificant because it's not a resident. Everybody gets, yeah, a resident sales rep because I got payroll, but you could have a sales rep, especially here in New England with the geography being so close. You could have a resident sales rep that could easily cover 2 or 3 states. That's creating a traditional sales tax filing requirement. Michigan, 100,000 or 200. I gave you 384,600, and I gave you 300 transactions. So you do have a potential Wayfair sales tax filing obligation. Now, there's something else I wanted to tell you about Michigan. It's got to be like 10 years. I can't believe it. It's got to be like 8 to 10 years by now. Michigan decided that they were going to become very aggressive, and they wanted to increase their sales tax registrations and obviously pump more money into their system. That they started sending out a completed Nexus questionnaire. And you may say, well, how did they fill out parts of a Nexus questionnaire? They became so aggressive that they said, you know what? We're going to go to our 1099 folder, and we're going to see who we're getting 1099s from, and we're going to send out these letters. And they did. And they said, please be aware, we know that you have a filing requirement in our state because we have a 1099 from you. So we know that you had somebody in the state. Michigan, you only got to be in the state 1 day, and you've created a filing requirement. So please be aware of that with Michigan. But of course, Michigan what? Tripped Wayfair. So you do have a Wayfair filing requirement. And put a little X or a little something in that traditional, only knowing that Michigan's that aggressive. Now, in all fairness to Michigan, they send out a Nexus questionnaire along with the statement, and they give you the opportunity to fill out the Nexus questionnaire and return it. And they give you the opportunity to perhaps do some type of a modified voluntary disclosure, which we will discuss at the end, what a voluntary disclosure is. All right. Missouri. I didn't put anything there. Mississippi, I put $415,000 worth of sales. I said, clearly you have a Wayfair filing requirement. And I said, you have solicitation of sales. So, whoop, am I looking at the wrong thing? I apologize. Mississippi, I apologize for that. Mississippi is $250,000 threshold. I gave you $415,000. and I gave you a Wayfair sales tax filing obligation. And I said you also have what? Solicitation of sale. So you've tripped both traditional and Wayfair. Now, I must tell you, Marty and I talked about this at the beginning of the presentation. What I hope to do at some point in January is to do a second presentation on corporate income tax, like what's creating a filing requirement from corporate income tax, franchise tax, net worth tax, and that horrible concept of non-net income tax. And I'm going to use the same schedule. So some of these sales I have designed on purpose to trip a corporate state tax filing requirement. All right, North Carolina, $550,000 worth of sales or 200 transactions. Clearly, they've tripped it. They have a Wayfair filing obligation. They have nothing else going on. New Hampshire, we don't care. I gave New Hampshire $750,000. New Hampshire could have had $7 million. There's no filing requirement. New Hampshire does not have a sales taxing system. New Jersey, I said 100,000 or 200. I didn't say that's the threshold. Sales per state is 50,000. Transactions is 150,000. New Jersey does not have a Wayfair filing requirement. But look what I did. I stuck solicitation of sales there. So New Jersey has a filing requirement from a traditional perspective. Jumping down, listen, New York, be careful. California, Texas, and New York are the three nastiest states in the country to deal with. New York says 500,000 and 100 transactions. So I gave you 500,000 and I gave you only 50 for the transaction number on purpose. Believe it or not, although you have $500,000 worth of sales, which is somewhat substantial, and you have 50 transactions as opposed to the and 100, you do not have a filing requirement under Wayfair. But again, I gave you solicitation of sales, and I told you that they were performing installations in the state. So clearly that's slam dunk. You have traditional Nexus filing requirement in New York. Ohio, I didn't put any sales there. The next seminar, we're going to talk about that Ohio consumer activity tax. Oklahoma, nothing. Pennsylvania, I said $100,000 worth of sales. And they don't want to know about your transaction. They're saying all sales. Like if you had one sale that was $100,000 in Pennsylvania, they'd come after you. Threshold include market sales. We're not going to be concerned with that right now. It says gross sales. So Pennsylvania wants to make sure that you're reporting 100% of your sales, not just your Wayfair sales, not just your Amazon sales, whatever it is. They want 100% of your sales. So you have a potential Wayfair filing requirement. And again, I put solicitation of sales there so that you can see that you've tripped both traditional and Wayfair. Tennessee sometimes can be funky. Like check on Tennessee, like about every 3 months. Look at Tennessee again. They changed their rules and laws like quite frequently. Tennessee now is resting at $100,000 worth of sales. And I gave you $500,000. And I told you, yes, you have a potential Wayfair filing requirement. And I did that on purpose, which will be explained in the second presentation. You'll see why I gave some of these states the sales that I did. Texas is nasty, but you don't have any Texas sales right now, so you're fine. The same thing with Utah, the same thing with Virginia, the same thing with Vermont. Washington in the past 3 or 4 months, I want to say, has had some significant changes to their Nexus theory. But Washington right now removed the threshold, says if you have $100,000 worth of sales into my state, and I gave you 150, so you have a potential Wayfair filing obligation. And then I said, you're performing installations in my state. Well, you would have a Washington business occupation tax return obligation, which we'll discuss in the next seminar. Okay. Wisconsin, I gave you nothing. West Virginia and Wyoming, I gave you nothing. Now, down at the bottom, I don't think you're seeing it on yours. On mine, right after, oh, I did, I apologize. See where I got Wyoming and there's nothing. See how I stuck other in there? Why did I stick other in there? I'm telling you from experience in supervising sales tax audits, you may have foreign sales, right? Put that total, although you're not going to pay sales tax on foreign sales. But the reason why is the states are going to look for your federal 1120 or your state tax 1120, I should say. And they're going to look to see what is the total sales you're reporting on your state tax return. And they're going to go back and check and make sure that it does agree. And I use 220, I use, 2022 for sales per state and 2022 transactions per state. And you can see the dollar amounts. Again, go back and check that 2022 sales per state. Make sure you can tie it in and prove to the state that those are your sales, okay? So now let's see. So after we've covered this, let me ask you a question. What can a business do to prepare? How can I possibly prepare for this before we get on to the next handout that I got for you? And I always tell my clients the best way to prepare for a sales tax audit or to understand Wayfair, to get a more accurate picture of your sales for Wayfair, you've got to what? Have clear documentation of the quality. I always used to say, clear documentation per state of the quality of your sales. When I say that, I mean, make sure that all of your sales tie into what? Some type of an 1120 return, make sure, tie it out. The states used to make you do that before when they did this, when you went under a sales tax audit. But now I'm saying to you, clear documentation of the quality. And now what am I adding? And the quantity. Now you've got to have the number of transactions. And I'm telling you, you better list your sales by state and transactions by state before you go under an audit, because it can get really nasty. But if you start collecting your sales in that format, let me see what my let me put out a schedule, sales by state, transactions by state. Let me tick and tie it in so I can prove to the state. You're going to be in much better shape, God forbid, if you had to go under an audit. All right. I'm on what is called handout 2 right now, and I'll see if I can bring it up for you. Okay. And let's see what else I got where I hit it. I get asked this all the time, and I have a more in-depth handout on this, obviously, because this is an hour seminar. And like I said, anything you want that I have, please email me, please get a hold of me, and I'd be happy to share whatever information I can. But I get asked this quite a bit. What if my business meets a state sales tax economic nexus threshold? Should I collect or remit by the enforcement date? That's a good question. Not necessarily. Many other issues should be considered first. I don't want you guys to get hurt. I want you to really think about this. I was so stunned. So many taxpayers, because they come to me for help, which I'm happy about. But how many people panic and ran out and registered the threshold without thinking about everything? Evaluate prior period nexus exposure. Wayfair is a sales tax filing system. It's got to do with sales tax, no doubt about it. But now, registering outside of a state's voluntary disclosure agreement. So what if you signed up for what? Wayfair. You registered for sales tax through Wayfair, plain and simple. And you didn't do a state and I highly recommend a state and local tax analysis first. So you didn't do a state and local tax analysis, and you had no idea that you really should have been registered for Wayfair in 2019, and you just registered last year. Well, what about that gap? See, Wayfair now, enough of time has gone by that Wayfair, that the states now are auditing these taxpayers for that period, 2018 to 2023. So they're going to say to you, well, thank you for registering with my state, but you should have registered. You know, we're going to audit you because you should have registered like 2 or 3 years ago. This is what I'm getting at, and I'm getting at it awkwardly, and I apologize. You had other Nexus exposure, because whenever a state contacts you like that, they're going to give you what their version of a Nexus questionnaire looks like. And I can't tell you how many taxpayers just fill them in innocently and say, oh yeah, date of first sale, going all the way back to like 2018, 2019. Activity in my state, resident sales rep, installation. Well, the state's going to come after you and say, well, thank you for registering, because you recognized and realized that you had a sales tax registration obligation. However, you told me in your Nexus questionnaire that you had other sales tax activity going on in the state prior to that, and you should have been remitting and collecting. So what if my business meets a state sales tax economic nexus threshold? Should I collect or remit by the enforcement date? Not until you know exactly what you're getting yourself into. Evaluate prior period nexus exposure. What if you realize, my God, I should have been in that state for a corporate state tax filing requirement? Some of the states, which I'm going to discuss in the second seminar, are called non-net income tax-based states. Just having sales into those states would trigger a filing requirement, like a franchise tax state, a net worth tax state. So now the state's coming after you under an audit, and they're saying, guess what? I mean, I can't tell you how many notices I've seen because the client didn't realize what they were telling the state when they were filling out the Nexus questionnaire. They thought they were doing something good registering for Wayfair, but they forgot to evaluate prior period Nexus exposure. Registering outside of a state's voluntary disclosure agreement eliminates your eligibility to participate in the VDA. Now, a voluntary disclosure agreement's a beautiful vehicle that's been around for a long time to help a client. If I did a state and local tax analysis on you, and I said to you, gee, you should have been registered in these handful of states for a while. How are you going to register from an integrity perspective? How can you register, say January 1st of next year, January 1st, 2024, when you know you had Nexus exposure for at least the past 3 or 4 years? Like, what date are you going to put down doing business in your state? A voluntary disclosure limits the look back period, which is a beautiful thing. Most of the states go back 3 years or 4 years. Some of the states go back 4. Maybe there's only 2 or 3 states now that'll actually go back 5 years. But we initiate a VDA on you. You have a limited look back period. The state agrees to abate. All penalties will be, eliminated. You won't have to pay penalties. Interest is rarely abatable in this country, except if I could prove that there was some hardship. You potentially could get a break on the interest. But you're registered in the state for all taxes. Anytime I open up the umbrella for VDA, I make sure I stick every tax in there that I know you should have been registered in filing. Because if you're not under the VDA umbrella, they're not going to just come forward and say, well, we saw that you registered for VDA under sales tax, but guess what? You have a state tax filing requirement. Do you think the state's honestly going to say, well, we'll automatically just subject you to that for a 3-year look back period? No way. So registering out of a state's voluntary disclosure agreement process eliminates the VDA eligibility. What I'm saying to you, registering for sales tax through Wayfair, and you should have been filing a corporate state tax return, will eliminate the VDA eligibility for any other tax except for that Wayfair sales tax. Second thing, ensure that you meet the threshold. Again, we discussed that briefly. Make sure, like I said, don't panic if it's got exemptions. Consider all state tax types. We discussed that. Ensure you understand the taxability of your goods and services whenever you're registering for sales tax. I don't care if it's Wayfair or traditional. Make sure you understand the taxability of your goods and services. And the last bullet is probably one of the most important ones, and I'm going to turn it back over to Marty. Ensure you have, now, okay, you're registering for sales tax in these states. Ensure you have the technology, the processes, and capacity to comply. Make sure you're ready to go right out of the gate and start filing sales tax returns. Marty?
Thanks, Inez. And I think everybody who's participating in this webinar can now understand how complicated this is and how detailed it is and how every state's different. And we've got a few minutes for some questions, and we have the following questions that I'd like to pose to you, Inez, please. Are we going to define, quote, purposely directing business to the state? You mentioned that very early. Could you just give an example of what that means?
Yes, and I can actually give you an example. But Monty, that's a good question, because believe it or not, and I'm not being evasive. I don't want to not answer the question. Sometimes it literally depends on the state. The states have different versions of you are purposefully directing business towards my state. Now, a quick example. When Connecticut first went to an economic-based state for corporate taxes, and that verbiage came out, multi-state verbiage came out as to what it meant. I was teaching a course that summer in Hartford, Connecticut, and there was 3 gentlemen in the audience, and they asked to have lunch with me really quickly. And they said, Inez, we represent a newspaper here in Connecticut. And he said, we're not asking you to have lunch with us for our sake. We need to ask you a question. They utilized a Massachusetts printer, okay? And he said, visualize this. At some point during the night, the paper gets put to bed. It's electronically transferred over to this Massachusetts printer whose niche is newspaper. They put it in the format, the obituaries, the ads, and everything. And they electronically send it back over to our evening editor, who then reviews it, approves it, prints it, and delivers it in the morning. Now, the thing to remember about that story, Connecticut went after the Massachusetts printer. Now, the Massachusetts printer or formatter never stepped 1 foot in the state of Connecticut. When they first told me this story, I thought they were going to tell me, well, then the printer, does this and delivers the newspapers for us. No, they've never stepped 1 foot into the state of Connecticut, and yet Connecticut went after them. You are purposefully directing business towards my state, regardless of whether you have a physical presence or not. So for Connecticut, that was the definition what that Massachusetts printer was doing. But I'm telling you, some of the states have different versions, and something you just need to research.
Got it. Next question is, in the Wayfair filing requirement, is that determined by state law in each of the states?
Yes. Well, it's a federal law, Monty. It's a federal law, but depending on the state,
the threshold, are they set by state law?
Yes, sir.
Couple other questions. What is the number one problem you've seen in the last 12 months that companies are running into? Can you pick one?
Can I pick? I think I think this is the problem that I actually see, to be honest with you, and that's why I wanted to do this presentation. I honestly think, and I'm pleasantly shocked and surprised, that the taxpayers, the businesses, are getting Wayfair. They're getting it. I may have a sales taxing filing obligation. I get that. But if they don't meet the thresholds, Marty, they're forgetting about traditional Nexus. And so
Mhm.
I'm seeing notices on this. And that's why I wanted to do this presentation. Like, wait a minute, traditional Nexus is still alive and well.
Got it. Got it. Another question. I own a business and I hope to sell it the next few years. I'm not sure I've spent much time thinking about all these issues. I assume I should.
I think you should. Yes, absolutely. Listen, I do so many state and local tax analysis for mergers and acquisitions, potential sales. It's so relevant in today's environment to have, if you're really thinking of putting your business out there, make sure you do a state and local tax analysis and you understand where you have filing requirements. And if you need to do cleanup work, like if the analysis shows that you should have been registered in several states and you're not, or you should have been filing corporate returns or sales tax returns, make sure that you get that cleaned up before you even think of putting the business out there.
Or it could disrupt your sale.
Oh, it does, Marty. I get called in on the bewitching hour all the time. And I'm amazed at what the potential buyer finds, like the information that's out there.
Hmm.
You know, I had a client like about a year ago that came to me through another CPA firm, and the business that was going out for sale sold frozen bagels all over the country. And at that time, without getting into it, Amazon warehouse was an issue and everything. The buyer, the CPA, I was sitting next to the CPA firm, and this is going on, and the buyer's talking. The CPA firm, the buyer knew where the frozen bagels were and in what warehouses all over the country that the seller didn't realize. You know what I'm saying? The taxpayer didn't realize where his inventory was sitting because in today's environment, like Amazon, for instance, they hold title. I mean, you hold title, but Amazon puts you think you've got inventory in an Amazon warehouse in Massachusetts, and the inventory ended up being in Arizona, Nevada. These are frozen bagels, mind you.
Mhm.
And that I felt bad for the taxpayer because they honestly, innocently had no idea where their bagels were.
Got
And
it.
of course, the buyer just backed off, Marty. It was
One
true.
last, one
Yeah.
last quick question.
Yes, sir.
You've gone over a lot of stuff, Inez, today.
I
Is
know,
there
and I
one key
apologize.
takeaway that you would want everybody to walk away with? Just one?
One takeaway,
Yeah.
yeah,
In like 1 minute.
okay. Well, again, I'm repeating myself.
That's
Know the
okay.
difference between Wayfair Nexus. Know the difference between sales tax traditional Nexus.
Mhm.
Without that, you're dead in the water. And the thing that I didn't talk too much about, Marty, is know your product. Know what you're selling. This is the biggest takeaway because it doesn't matter how, if you're selling it through Wayfair or traditional. Know what you're selling. Know if it's taxable or not taxable. Make sure you have your exemption certificates in place because I have never seen the states as aggressive as they are right now. I
Right.
think that's the biggest takeaway.
Got
Know
it.
what you're selling. Make sure, this sounds ridiculous, but I've seen it. Make sure what you're selling is correctly verbalized and stated in your contracts with your clients.
Hmm.
And make sure that agrees with what's on your website. Because
Yeah.
I've been in more situations where there's three different, it looks like the three different clients and it's not, it's all the same client.
Great
So
answer, Inez. A big
that's it.
thank you to you, Inez.
All right.
Obviously, you know this information cold. You've forgotten more about this than most of us will ever know in our whole lifetime. So thank you very much. We
No,
want
thank
to thank
you.
all the participants for joining us today. Please fill out that quick survey. And if you want the handouts, we can email them to you and look for the recording of it as well. As Inez mentioned, there'll be a part 2 of this whole SALT issue, state and local taxes. That'll be sometime in January, and we'll let you know when that is scheduled. So I hope you all enjoy the rest of your day, and we appreciate you joining us. Thank you very much.
Thank you.